People will join later.
So welcome to all of you in Ashok Tower Talks, Talks 28. Today we have Praveena Rai, one of our Ashok Tower resident, who is a Chief Operating Officer of NPCI, National Payments Corporation of India. Praveena has been playing a very stellar role in digitalization of the payment system in the country. And recently, she has been featured in the 2024 Forbes India Women Power list of the India's top self-made women. It's a great distinction she has achieved and very recently. And I would like to speak a little bit about her introduction from the write-up of the Forbes. She has significantly contributed to shaping India's digital payments landscape. In her current role as NPCI's Chief Operating Officer, she is responsible for promoting the growth of its products and introducing new use cases for its flagship products such as UPI and RuPay. The veteran banker with over 3 decades of experience joined NPCI in 2019 after professional stints at Citi Bank and HSBC Bank and Kotak Mahindra Bank. She an engineering graduate from College of Engineering Guindy and an MBA from IIM-Ahmedabad, has built expertise across banking verticals, technology, and marketing. And this diverse background has helped us steer NPCI to drive rapid digitalization in some of the remotest villages in India. So with that, a bit of an introduction about her, I'll request Praveena to start her talk. And after her talk, we will have a Q&A session. So yeah, Praveena, over to you.
Thank you very much, Anil. Thanks for inviting me to be part of 80 Talks. So I look forward to an interesting discussion here. And so let me just kick off with a bit of background about myself. I currently work as the Chief Operating Officer of NPCI, as Anil introduced. And I'll just step back a little bit before we come back and spend a good part of this discussion on NPCI and all the great things that's really happening in the digital world in India. So before I joined NPCI, I was a career banker, worked in HSBC, in Citigroup, and in Kotak Mahindra Bank. Now, in this journey, I've really looked at the retail bank, covering multiple products, the corporate bank, looking at both trade, cash management, payments, and also covering different facets of banking. So actually, I first started off my banking career with service. And I think it's a great place to start because it really teaches you something about the industry that no other role can. So service, doing operations, looking at products, designing new products, sales, and this entire gamut of experiences was something that I, looking back, I'm so glad I did. But I think when it was happening, it was a sequence of events and decisions that were happening, at that point in time. And I'm so glad that this is the way it's really played out. And I say this in the context of the fact that more and more, increasingly, organizations are very functionally oriented, and people do join in a particular role and probably grow to have deep expertise in that role, but might fail to really have a broader perspective across the industry. And for banking, this was extremely critical and gave me a very solid grounding. I was very fortunate because within the scope of HSBC, I also got the opportunity to work outside India. So I moved to Hong Kong from India to manage the Asia-Pacific region, about 18 countries. So again, very enlightening when it came to cultural learnings and when it came to really understanding what works in markets outside India, to also appreciate how common customer needs and problems are, while at the same time being able to fine-tune the requirements that each market might need. So these were significant learnings. And I would say that the banking part of my career, really set me up for the kind of work that we're doing in NPCI now very well. Now, moving back, I have worked in other industries. In fact, when I came out of college, I joined Procter & Gamble in marketing, went on to do, my own startup, and also worked in a technology consulting firm. And through all of this, the common thread was my passion for technology and basically leveraging technology to deliver services and solutions to customers. Going back into life, I think if I was born and brought up in Chennai and did my schooling there, went to the College of Engineering, Guindy, for my electronics engineering. Now there, out of electronics engineering, I got very fascinated with biomedical engineering. And my first job, which I did for 3 years, was with Inchem Electronics. I was really lucky. It was a great phase of learning, working with phenomenal people there. We actually built the first indigenously developed, ultrasound scanner in India. And I was part of a lot of work on the hardware design, as well as writing code in assembly language. Those were the days when it was 8285 and those kind of microprocessor kind of coding, which I thoroughly enjoyed and was very proud to have been part of that journey. But within about 2 to 3 years, I felt that, the kind of scope and growth that was there within country at that point in time for a career in design of electronics and software was not at the level that it is today. And that's how the move to a management career really started. And I went on to IIM-Ahmedabad, where I did my MBA. Again, at IIM-Ahmedabad, it's wonderful because it's not a specialization course. So it permits you flexibility to pick and choose whatever subjects you want. And that sort of gave me the ability to learn across multiple facets of management. So this is sort of broadly the journey of my academic and early professional life. I was really, again, so thankful. My parents have been very academically oriented. My mom was a professor, so probably in that generation, being a working lady and the way she managed home and her work and stayed focused. In fact, along with her family life, she also did her PhD. And I think those kind of facets really inspired me in terms of, being able to live up to what she thought was the potential. Now, with that background of my parents, I was also lucky that I met my husband in Indian Institute of Management. So we were both classmates, and I would say that he's been a very supporting partner. And it is now, I think, well known with research that to have a successful career, it's a big positive to have a very supporting partner. Now, I have a daughter. She's in her 9th standard. It's a very beautiful age, and I try to spend as much time outside of a very busy work schedule with her. She encourages me, all the time to do more, and really enjoys being an extended part of what my work is as well. So I think I would say overall, it's been good to have a positive environment with people who nudge me, guide me, push me. And to this, I will add mentors and colleagues, not to mention industry colleagues, some of whom are also on this discussion today, who really come together. And I think that's something very unique that's happening in India, where the innovation happening in our space is being driven by the ecosystem. And this gives me a good segue to start talking now about NPCI. Now, NPCI is an organization that works as a public utility. It's a public utility set up as a not-for-profit organization. This was about 13 years back. It was set up by the Reserve Bank of India as part of some of the work that was happening in the policy body as part of the Payments and Settlements Act. And NPCI was established to take over the operating activities of payment systems in India. And it was very consciously set up as a public utility. The objective of the organization is not purely commercial in nature. The objective is to serve the country, to use payments to drive economic growth. And in this context, it's also set up as a not-for-profit. So when I say not-for-profit, it does not imply that there are no profits, but the implication is that the commercial model operates in a way that makes the organization self-sustaining. So the organization then invests back into people, talent, technology, innovation, so that we are able to drive what's happening in the market to the potential that it offers. So the organization was set up by 10 banks promoting it at that time. And now this has increased to a large number of bank players, and recently also includes non-bank players, given that non-banks also play a key role in the payment ecosystem over the last few years. Now, NPCI started off by actually taking over 2 products from the Reserve Bank of India, which was check clearing. It's called CTS, check truncation systems, and the ATM switching. So today, when you go to an ATM and withdraw cash, that's part of a product called NFS. And these 2 were actually what seeded the payments work in NPCI. From there, the direction and vision was to drive towards innovation, to drive towards faster, more efficient payment systems. The range of products includes today flagship products like UPI, which is a digital payment system that has a large number of users. It includes RuPay, which is a card network. It has debit cards, prepaid cards, credit cards. It also includes IMPS, which is a real-time payment system when you pay through your bank, either in the branch or in the portal or in the banking app. Then, primarily to a large extent, you'll be paying through IMPS. And also has other systems like NACH, which is the national ACH clearing system for bulk payments, and the Aadhaar payment system. Now, the Aadhaar payment system plays a very big role in direct benefit transfers across the country. So whenever there is any sort of a government benefit scheme, then users are able to go use their biometric, Aadhaar-enabled biometric, to withdraw cash, to deposit cash, and to enjoy a slew of banking services in close proximity to where they may be residing, even if a physical branch were to be far away from them. So this is sort of the gamut of products that is currently there with NPCI. Now, what do these products mean? And as users of this product, what's the difference that NPCI really brings to the table? So the genesis rests in few key principles. The first being interoperability. Interoperability is a principle by which a user can pay from any bank account to any bank account. And while it seems so simple and something we take for granted, there are markets in the world where the kind of efficiency you have in a payment is very different when you're paying to somebody in the same bank. And the moment you're trying to pay somebody who is, with another bank or financial institution, then the process has a lot of friction associated with it. So interoperability is the primary premise for NPCI. And how does this work? This happens through standards. So technology standards is something that we publish whenever there is a new payment system or there is any new functionality or improvement to the payment system. All the financial institutions, banks who are members of NPCI technically integrate to NPCI. They follow those same standards so that we are all talking the same language. And that implies that the transfer of money from one account to another happens in a very seamless manner. Now, with interoperability and standards, the design of products is based on the kind of customer experience that can be offered. So customer experience needs to be easy, convenient, digital, and safe. So what does this mean? So easy and convenient is to say, how can we really bring more users into payments, into digital payments, by making it easier for that user, by making access easy, by eliminating steps that may actually cause friction and create both a sort of a mental barrier and sometimes even a physical barrier to being able to perform a payment. So even if somebody is not very literate, not very conversant with complex navigation in an app, does not stay very close to a branch. So all those sort of barriers need to be eliminated. So that's really the premise of making it easy and convenient. Digital is really to make it real time. And real time, I'll say, is instant. Instant is in seconds. And when we say seconds, why does it need to be in seconds, right? Earlier, I could make a payment and it would take maybe a couple of hours to reach somebody. It would take a day earlier. Why does seconds matter? Because seconds gives confidence to someone. So when A makes a payment to B, and if that entire payment is fulfilled within 10 to 15 seconds, which to an individual feels like it is instantaneous, then I'm very confident that the job is done, right? I don't have to follow up after some time saying, hey, have you got this money? Is it stuck somewhere, etc., etc. So whether I'm paying another person, whether I'm paying a merchant, whether I'm paying online for an e-commerce transaction or I'm paying at a store, I'm confident that the transaction is done as a user. And that's the big role that digital plays. And when we talk of digital, and for those of you who may be interested, there are two parts to this. So one is really the customer experience itself. So for example, UPI and IMPS, etc., have rules by which the payer and the payee who's sending the money and receiving the money will have their accounts debited, credited instantaneously. And they will also get an SMS confirming that the money has been credited and debited. So the transaction has been complete for them, as well as they have the information that the transaction is complete. So they are comfortable that there's nothing more to be done there. In the back end, what happens between the banks? For the bank, the settlement of funds happens subsequently. So it used to happen from once, twice a day. We now settle, close to about 6 to 8 times in a day. So that means every 2 or 3 hours, the interbank settlement is happening through NPCI. And this happens through the Reserve Bank of India accounts. So this ensures that any outstanding from a liquidity standpoint, also gets managed on an intraday basis. So the parties involved here are consumers, merchants. For them, it has been instantaneous. The banking institutions for whom the settlement has happened intraday, and that happens on a net basis. So between NPCI and the banks, there would be some inflows, there would be some outflows. Those positions are netted off, and those are the kind of values that we settle with the banks. The third party here is the non-bank fintechs. Now, non-bank fintechs also play a very critical role and have been significant contributors to driving digitization and digital payments in India. And they play roles on both sides of the transaction. So one is a role on the consumer side. So, for example, there are very popular apps that exist, payment apps that consumers sign up for. And the payment app then becomes the front end using which the consumer performs their transaction. Now, there are bank apps and there are payment apps run by non-banks, and they both follow the same set of rules when it comes to how they interact and connect through UPI. So the customer experience is standardized and does not need to change at all. Now, when it comes to the fintech apps, there are some extra guidelines that are there to protect the UPI transaction. So in the back into a fintech, there is a bank. So the bank takes responsibility for compliance to rules, regulations, ensures the customer interests are protected, manages the data, the privacy, so on and so forth, so that the user now has a choice. They want to use their favorite app, whatever the app may be. If it's a bank, then the bank anyway holds the direct accountability. And if it's a fintech app, then that operates through a banking partner. This is on the consumer side of the transaction. And then we have the other side of the transaction, which is the merchant or the receiving side of the transaction. It can be another consumer, it can also be a merchant. And there again, the role of non-bank fintechs comes into play. So they operate as what is called payment aggregators. This used to be a category that was only managed by banks, but now the Reserve Bank of India also regulates and has licenses for online payment aggregators. So the payment aggregators then offer the end service to a merchant shop or lab. You will see a QR sticker and you'll find a brand name there. It could be a bank, it could be an HDFC Bank, an ICICI, it could be a fintech. It can say Paytm, it can say, Google Pay, Phone Pay, and so on and so forth. There are also dynamic POS machines. So the POS machine can accept a card. If somebody wants to make a UPI payment, it also generates the QR. So the organizations that provide that set of services, again, can be a bank or an authorized payment aggregator, which could be a fintech. So this is the role that fintechs play. And both banks and fintechs have played a phenomenal role in the success of digital payments, which in turn has then played a significant role in the way digitization itself has played out in the country to power the kind of simplicity in driving commerce transactions. Now, in the midst of all this also comes safety. Safety is inherent to the design of a product. So, for example, if it is a RuPay card, the RuPay card follows certain guidelines. Whoever is the participant, for example, if it's a merchant, then the merchant has to store the card in a tokenized form. So tokenized means the card number is not there. There is another number in lieu of the card number. And hence, that number cannot really be traced back to a particular individual or traced back to a particular card, but it still helps the transaction to go through very seamlessly. When it comes to UPI, the inherent registration of UPI contains certain principles in the way that the technology deeply binds to a phone. So there is a particular app, there is a phone, there is a SIM card with a number, and that same number is also the number in the bank account. And all these parameters are locked in and form a very, very secure protection for the user when they are using UPI payments. So inherently, safety is designed into the product. And RBI has gone one step further, and India is one of the few markets where second factor authentication is mandatory. Second factor authentication means first factor is what you have. So I have my phone and I have UPI in the phone. I've already registered UPI and it has been bound to my phone. If I have a card, then I have the physical card with me, which is very secure. The second factor of authentication is at the time of transaction, I need to give a PIN like a UPI PIN, or I need to give an OTP, which comes to me as an SMS. or I might need to give a sort of a password depending on what payment system is being used. That is the second factor of authentication. And a lot of countries globally do not require this. In India, we do require, given the population, given a lot of people coming into the payment system who may not be very aware of how to protect their interests. This becomes a protection factor so that the transaction and the actual payment is authentic when it is executed. So this is really safety being inbuilt into the design. Now, we do have environment situations which are playing out globally and playing out in India. With the fast growth and advent of digitization, consumers are not very clear what really is right and what is wrong or what is acceptable. You know, in the physical world, we are very clear. I come into my house, I lock the door, you know, I have my wallet. I don't leave my wallet just sort of hanging around where people can access it and see what I have in it or, take things from it. So the guidelines in our mind, the way we keep our checkbook, the way we handle our bank account, we know that it is something precious, something, important. Maybe my life savings are there in that account. So I deal with it with a lot of caution. But, cut to the digital world and that sort of sense of what is okay and what is not okay starts blurring. So a lot of people nowadays do fall prey, become gullible to social engineering. They believe they won a lottery or they've got a job or, they just have to take a couple of actions and they get some money. Or, there are investment scams. You put 100 rupees, you get 200. You put 200, you get 400. And, for 10 days, you're doing this and you're on a high, feeling everything's going well. And suddenly, you're putting 50,000 and you think you're going to get 1 lakh back and you're not getting that 1 lakh back. The person on the other side has disappeared. So falling gullible, I think, is something that we can, each person can take the control and power to themselves, because the power is available with the consumer in what they believe and what they disbelieve and how they are protecting their finances. So a lot of work on awareness and awareness campaigns. I think RBI uses, does some good work with Amitabh Bachchan. We do a lot of work on awareness of how to use digital payments safely, how to benefit from all the positives, but, how to use it safely. Don't share your PIN. When you scan, it only debits your account. You'd never scan to get money. You're only paying out when you scan a QR. Similarly, if there is any sort of erroneous debit, it can be immediately reported. And there are now, of course, portals where cybercrime cells actively engage in further investigation and so on and so forth, which is more in the ambit of law and order. So these are all the broader tenets with which NPCI operates digital payment systems. And, what are the numbers looking like? So I think if we look at UPI, we closed last financial year for India transactions close to about 13-14 billion transactions a month, hitting about 500,000 a day, and of a very significant value as well. So the number of users is in hundreds of millions. Has it yet touched every user in the country? Not yet. But if we look at the number of smartphones, which is about 500 million smartphones, unique users, maybe about 450 million, it's, pretty much touching that space now. And research also indicates that many households have a smartphone as a shared asset. So at least the household is covered, even if every individual, adult individual who has a bank account is not yet covered. So UPI is really growing leaps and bounds, continues to hold the confidence of the public, has taken everyone's interest, and people just love to use UPI. Now, RuPay as a card scheme has been around for a few years as a debit card and prepaid card. Now, in the last 3 to 4 years, has been a major thrust for RuPay in the credit card space. And as a relatively newer player, it's been a time of significant and fast growth with about nearly 10% plus of the market with RuPay credit cards. Now, RuPay credit cards can also get linked to UPI, and that's a big positive because now you don't have to really carry a credit card. Consumer can just link their RuPay credit card onto their UPI payment app and continue to make payments using their credit cards, just like otherwise. So that again has been extremely popular. Speaking of which, the UPI model also has multiple options from which a consumer can pay. So it can debit from a bank account, it can be a savings account or a current account. It can debit from a wallet, which is called a prepaid account. It can debit from a credit card, a RuPay credit card. If you have a RuPay credit card, just link it to your account and it can debit from the RuPay credit card account. And it can also debit from credit accounts. This is something that has been launched and the market is slowly going live with it. It will be available soon for everybody. But the first three, pretty much already is. And this is the way wallets work as well, right? Wallet can work within what's called a closed loop system. So which means if two people have the same wallet, then they're able to use the wallet. But going back to the point I'd earlier made on interoperability, with UPI, what happens is using any wallet now, a payment can be made to anybody else using UPI. Then we look at systems like IMPS, look at the Aadhaar payment systems, NACH systems, all of them upward of hundreds of million transactions each, fast-growing digital payment systems in the country. So this sort of covers and summarizes the various kinds of digital payment systems we have in India, the roles of various parties who are operating the payment systems, and what is sort of driving this? Now, what is driving this is customer confidence. Customer needs to feel that when I need to make a payment and if I use this payment system, it's going to work. Now, that is driven by technology and technology inherent to the way the product is designed, but also technology in the way the product is delivered every day. And NPCI has been a pioneer in looking at technology at scale with a high degree of efficiency. So at scale will really be to say that what is the, it's called TPS in the technology world, transactions per second. What is the kind of transactions per second that the entire infrastructure needs to be ready for? An entire infrastructure is end to end. There's NPCI in the middle of the transaction. There is the remitting bank. There is the app of the consumer. Then there is the app of the recipient, merchant or consumer. And then there is the bank of the recipient. So all entities end to end need to have the technology ability to process the transaction in milliseconds without failure. And that's really, I think, the magic that the industry has come together, not just innovating on solving customer problems and creating great product design, but also in driving technology at scale. So we look at a metric called, technical declines. Technical decline is a very sort of technical metric, but in simple words, it just says that less than 1% of transactions can fail on an end-to-end basis. So it's just that little bit of a leeway, because any one party in the ecosystem has some sort of a small variation in their technical availability, then there could be a few transactions that have a challenge. So I think 1% is sort of that limit that is there for a few transactions not going through. But there are mechanisms that then recreate the transaction for it to actually succeed subsequently. Now, this is scale. And when we talk about efficiency, now efficiency mechanism, I think I would say, thanks to the NPCI CEO, Dilip Pasbe, and phenomenal technology team that we have, we really drive this with open source. So NPCI was very early to the open source space, believing that we don't need only dependence on expensive licensed technology to host, develop, and deliver a lot of the work that we do. So I think that also helps to keep the cost to an optimal level, despite the growth and despite the scale. And that's also one of the promise of NPCI, which is to continuously look at how this cost efficiency can be given back to all the relevant stakeholders in India. So that's the entire sort of tech stack. UPI, for example, is currently designed for what we call a billion-a-day architecture, and soon sort of getting envisaged to what next and looking at going beyond that. Now, when we look at technology, I think one has to talk about the role of artificial intelligence. Again, we are big believers in what AI can do for us. We use it extensively in risk management. So there are AI models that have been developed in partnership with industry to provide a sort of risk score. And if the transaction is seen to have a risk score beyond a certain threshold number, then that transaction is actually denied. Sometimes then it is passed on to a bank, and the bank can then take a decision depending on the profile of the consumer, how sophisticated, savvy the consumer is, on whether to let the transaction go or not. So this, of course, creates a sort of technology solution to some of the elements we spoke about earlier when it comes to risk and fraud management. The use of AI in driving customer experience, use of AI in looking at conversational payments. In fact, there's something called Hello UPI that was launched a few months back, which is to take payments into a conversational mode, just like many of us talk to Alexa today and ask for a song to be played or something like that. How can we actually talk to our phones or devices to make payments for purchases or make payments to people? So we worked with Bashini, which is the unit of Government of India, along with IIT Madras, developed few AI models in a few languages, and slowly that is now going to market, and there's a lot of learning involved there. So this is the tech element involved in delivery of digital payments. Now, what's key? What's next? Where we are today, I think there's a lot on the plate, looking at the customer problems that exist, transit being one of them. The National Common Mobility Card can be used at most metros in the country, where you just have to tap in and tap out, and you don't have to buy a separate ticket. So any NCMC card, which most RuPay debit cards, about 140 RuPay debit cards are there in market today, 140 million, and they're all NCMC enabled cards. So this is something that is also playing out. But if I were to just pick and choose and say what's really going to be a big focus in the coming months, one is pre-authorization mode of payment, which means that the user has given a mandate. The mandate at simplistic level is used for utility payments, bill payments, subscription payments, OTT subscriptions, but can also be used very effectively for many different kind of pre-authorized payments. Micro insurance, micro SIP for investments, which means that one doesn't have to do, execute mandates on a monthly basis. It can be even on a daily basis. And that really helps us to drive penetration down the consumer group, making it very accessible to people for whom that outlay might have been too much when it came to a month. Credit is a big space, basically working with industry to power credit, enable credit, payment data becoming very important with customer consent to be used for assessing the credit worthiness of a user, being able to offer lower tranches of credit when the user needs it. Today on a credit card, we'll get X lakhs as a credit line, and we may or may not need it. We may just be using it for convenience. But as we look at, how do we increase users onto credit and use credit to power up growth in the economy, it needs to be at a retail credit level, looking for people where there is integrity, there is intent, and being able to help them to develop a credit history so that once there is a credit score, then it becomes life-changing to the fact that they have access to credit when they need it. There is a wedding, there is a festival, there is a medical emergency, and today that's where people struggle the most, when they don't have access to money, even though they have the integrity and ability to repay. So this is a big opportunity space in which there is a lot of focus currently. And of course, there is bill payments, which works very tightly associated with payments. And RBI has permitted bill payments across all categories. NPCI has a subsidiary entity called NBBL, which runs this as a business unit. And there is the whole Go International. So given the success, given the impact that digital payments has given to India, how can this go global and how can this help other markets is also something in play. So three facets there. There is, of course, remittances, inward-outward remittances. India is one of the largest markets. Remittances still tend to be expensive. They take time. There is unknown fees, in the middle. And all of these can be eliminated if we can expand the experience we're having domestically into the cross-border space for retail payments as well. For Indian users to be able to use their UPI when they travel overseas in markets, this is the second space. It's called payment acceptance. And a third is there are countries who are interested in really doing a lift shift of payment products that we have, like UPI, RuPay. It could be the protocol, the technology, the rules, the guidelines, all the whole stack. And I think these are all things that a subsidiary called NPCI International as a business unit is taking forward. So these are many of the things in play. Of course, UPI is a very important part of what we look at as the digital public stack, the whole DPI, public infrastructure, digital public infrastructure, which India is taking as a big message globally. So it, of course, has the identity layer, which is Aadhaar. It has UPI as a payment layer. And you have ONDC as an e-commerce layer, and using this open, interoperable, standard-based model can actually then expand into practically any industry. And for India now, in fact, a lot of focus is there, including in the healthcare industry, on taking this model forward. So taking DPI global is also a big focus, and there is, of course, a lot of work happening across the board on that count. I think with that, I'll take a pause. Thank you very much for hearing me out, and happy to take any questions.
Yeah, thank you, Praveena, for a very, very nice talk. So with that, we open the floor for question answers. So anybody wants to ask any question?
Yes,
please
I need
unmute
to
yourself.
ask 2 questions.
Yeah, sure. Please go ahead.
Yeah, Praveena Goyal here. I have 2 questions and later on maybe third question also. First question is, suddenly I was advised move out of Paytm. I was very frequent user for everything, and I had to moved to Google Pay, little bit difficulty, but I am now comfortable with Google Pay also. Would you like to share what were the problems with Paytm? Should we move back to them or not?
So Paytm is active. There was a RBI intervention where they placed some restrictions on the payments bank. But Paytm has converted its app to a non-bank fintech app, and the app continues to operate in the market. So I don't think you should have any problem to use UPI on Paytm.
Okay. Second question. There is a lot of talk from security point of view that there are possibilities that somebody can clone your phone. Now, if I am using the same phone with different payment apps and also OTP on the same phone, the problem arises or can arise. Are the bank or organization allowing that the OTP can come on a different phone which is only used for OTP purpose, so that even if cloning happens, the intruder does not have access to the OTPs? What is your opinion about it?
I think today there is a phone number in the bank system, and that phone number is a very important control parameter, and all the bank's notification uses that number. So if your suggestion is to have a second number on which sort of sensitive data is processed.
I want to correct, not second number, change the number only for the purpose of OTP. Every other information flow remains same with the old number, because that otherwise will require too much change. Only OTP should come to a different phone, because the cloning is not only of the payment apps, also the OTP is the main channel through which they can. That is my question. That means I have all my payment apps on one phone, but when the security OTP is required, that should appear on a different phone. That is what my thought.
Yeah, it's a valid thought to explore further. I think this is under the remit of the regulator, so it's something that can be taken up to the bank.
Okay. Third small question, maybe it is my own problem. I use very often the bill payment automatically, and sometimes there is a possibility, and it does happen, that you may authorize two channels, maybe for example Paytm and also your bank account, and duplicate payment can happen in this manner. There is no way to check that payment is not duplicated. You got my question?
If a payment is duplicated, it will immediately show up on your transaction history.
No, that means after the payment is duplicated, it will show up. Is there no way technologically that the organization who receive payment does not get payment twice for the same particular item? For example, a monthly payment of gas, I might have by mistake or oversight given two channels to make payment, like Paytm and also to my bank account. But the gas authority should decline the second payment of the same month. That is what I'm saying, technologically.
It's possible. It's possible. But sometimes when some of these rules become very intrusive, then you might have wanted to have made a payment, but the system may think you're making a duplicate payment. So some level of intelligence and maybe customer engagement will be required. So someone maybe contacts you back or gives you a notification, you reconfirm yes, no to process that payment. So I think those kind of intelligent solutions will be helpful as value-added features. And there are players in market who do offer them. And I just want to also clarify this, that NPCI offers the interoperable systems, right? So we are like the railroad, the rails or the roads. So the focus is on offering great roads that can take you to a lot of places. But the people who manufacture the cars, that users use are the banks and the fintechs, as I was explaining earlier. So there are players who do offer some very good value-added features of the sort.
Thank you.
Thank you.
Yes, I have one question, Praveena, on cybersecurity aspects. So, like, the payment system is kind of, and especially the national payment system, the way NPCI operates, is at the heart of the economy in a way. And how do you ensure that it's always secure? Because there will be always hackers trying to hack the system. Even global hackers are always there. So, how do you ensure that we are always cyber secure?
No, it's a very, very critical priority for the organization. I mean, it's a very back-end activity. It's not something I spoke about, but it's something on which we lay ultimate emphasis. So there is a lot of work that happens to prevent, detect, to address, to repeal, to test, to sort of self-hack. So, I mean, there are tools absolutely best in class. There are entire function. There's an entire function that's just focused on this activity, both external, which operates with the industry, as well as internal. There's a lot of knowledge sharing. There's a lot of information sharing, because sometimes you pick up the red flag, not necessarily when it hits your system, but much earlier. And all of those elements are in place, including working at an international level.
Okay. Yeah, Mr. Dhanukar, or Mr. Deepak, you raise the hand first. If you can go ahead, and then I'll go to Mr. Dhanukar. Yeah, Deepak.
Sure. Thank you for the talk, Praveena. I was curious about the way NPCI is structured. You said it's structured as a public good. I was just wondering, when I look at the progress in many industries, it's led by the private enterprise. Here, it's a very rare shining jewel in terms of a public enterprise sort of really showing the way in terms of innovation and international expansion. What's your I was curious to get your take on the criticality of that decision to set this up as a public good rather than a private enterprise. What role do you think it's played in just the spread of UPI and just the sort of the adaptation of this technology in India and overseas?
Yeah, I think the structure has been very well thought through. So if you look at the original promoters of NPCI, there were 10 banks. And I was actually fortunate to be in one of the banks when NPCI was set up. That was my earliest interface and interaction with NPCI. So there were 6 public sector banks, 2 private banks, and 2 foreign banks. So it was a group of 10 banks that actually came together as the first round of promoters for NPCI. And this was all under the umbrella and aegis of RBI. So I think that sets a genesis, which is very different, because it's really for the industry, by the industry, right? So it's industry coming together, setting up an organization that's then going to serve and service the industry. And the direction on consumer, what to do for the consumer, how to impact the life of the consumer, how to address the needs of the consumer, comes from policy and regulations. So I think that's the beauty in the way that NPCI is set up. And what that has done, it has created an environment, a culture, a process by which there's a highly consultative approach. So what's next? What's the next set of problem to solve? What needs to get picked up? Really comes from the voice of the industry. Yes, NPCI does our own research, and we talk to consumers and we keep sort of pulling stuff out. But there's a lot of insight that comes back from industry saying that, hey, this is what we need to fix, or this is what we need to look at addressing. And through working groups, through the mechanism of steering committees for each product, decision making is done, which then, of course, goes through regulatory consultation, goes through further risk management and strategic buy-in. But the whole model of working for the needs of the industry becomes very crucial to the success of the way the NPCI role is played out. If NPCI were to be seen as another commercial organization, and potentially even competing with industry participants, then this partnership, this very close partnership of parties who might even have conflicting interests. In fact, one can assume that everyone does have some level of conflicting interest as well. So I think people from different facets of the industry coming together to create these common directions and common directives is the beauty of the current model.
Thank you.
Yeah, Mr. Dhanuka. Pawan, I'll come back to you after Mr. Dhanuka. Yeah, Mr. Dhanuka.
A wonderful talk and on digitization payment, very, very interesting. You talked about two-way authentication for making payments. So sometimes even for small payments, we have to make just like if I pay through my bank, some even small payment, they sometimes go for two-way authentication where I have to see my debit card and put the second authentication. Whereas in a large payment, even which I pay my rent, monthly rent to my landlord, and it just go through in a single OTP and the payment is through. So is it mandatory that for every transaction it should be two-part authentication for making payments?
It is large. It is mandatory, and I had mentioned it that for UPI, for example, the first factor is something which is driven by technology inside your phone. So the fact that you have your phone itself is the first factor.
No, I'm not using my phone. I'm doing through, say, let's say my laptop through my internet banking, and it just sends a OTP. And once but of course, I'm doing every month to the same, and it is bank to bank. It is transferred to the bank of my landlord. So from my bank to bank of my landlord, but it takes only one OTP and the payment is through. There is no two-way authentication. It may be for an individual, maybe a little bigger payment. Even then, it doesn't ask for a second authentication.
No. So the retail payment systems need two-factor authentication. If you're using the bank's own portal, and the bank has already authenticated you, they know that on this laptop, you are the person, they've already confirmed your laptop.
Yes.
You have your user ID, you have your role in the bank's app directly, then the rule is already complied with.
Okay, that is the thing then. Maybe that I was just wondering that somewhere they asked two-factor authentication, but even for major payment they go through. But of course, I'm doing from my own laptop.
Bank has a lot of other controls. For example, before you set up a beneficiary, they will require a cooling period. They reconfirm the beneficiary. They provide those value add features. They know that you make frequent payments to that beneficiary. So there are a lot of controls that the banks have within their own payment systems.
Okay, thank you, Praveena.
And RBI does permit less than 500 rupees using UPI. There's something called UPI Lite. So if you have UPI Lite on your phone, then up to 500 rupees, you can make a payment without a PIN. So when you want to make really fast payments, 50 rupees, 60 rupees, you're trying to make those kind of payments and you don't want to bother with a PIN, then you can do that.
Okay. Yeah, that I'm aware. Thank you.
Thank you.
Yeah, Pawan.
Thank you, Praveena ma'am. A really insightful session about NPCI, digital payments, and multiple things which are coming in future. One thing which a lot of time the users of the UPI, and generally I will say one is the bottom of the pyramid of the income level. A lot of time, obviously, the people in the senior age group is about like concerns about the frauds happening, and we already know kind of fraud which happen. A lot of money get transferred from UPI to another. But as I understand, all these transactions are actually going to another KYC compliant account. So are there any kind of initiatives being taken or any kind of actions being taken by either NPCI or other regulator where those monies can be frozen and people can get back those monies so that it increases the overall confidence on the UPI?
The speed with which a user reports an incident is very important. Report to the bank, report to the cyber cell, because now there's a lot of coordination between law and order as well as financial institutions to take fast action. What typically happens is the beneficiary account, yes, it's a KYC account, but sometimes it's a mule account. And what's a mule account? A mule account is a genuine individual who has a bank account, but not very active. Maybe somebody in a village somewhere. So they are offered some money, and the sort of miscreant uses this account to their purpose. And within a few minutes, maybe I would say up to an hour of a transaction happening, that money has moved on.
Right.
So if somebody reports immediately, there could be a chance. But having said that, the speed at which the money moves thereafter into multiple accounts, and we've traced and tracked, many of these, the speed tends to be quite high. So being careful in the kind of transactions one makes and knowing why you are making the transaction. And, we all know transaction will have a purpose. You want to pay a friend, you want to buy something, then you're clear. Then there's no problem at all. When somebody is hooking the consumer, right, through a hook, they're putting a hook, they're fishing, with all this lottery, investment, etc., right? And when somebody falls for the hook is where it gets challenging. Now, actually, all payment modes are used, because the hook and the problem has nothing to do with one payment mode or the other. All payment modes are used. UPI is the largest volume, and hence, of course, gets used at a smaller level. So I think it's about being aware. And I did mention that there are AI tools and AI models that we use, the industry uses, and that is actually keeping a lot of things under control. A lot of proactive, preventive action is happening because of that.
Great. I see those things going further, enhancing the confidence of the people. Thank you.
Yeah, Mr. Venugopal, you wanted to ask a question. You can unmute yourself, and I'll just unmute you. Okay, I don't know. Maybe some problem. So I just have one or two quick question, Praveena. One is this Google Pay, when we use it, is the servers are in India only, or like Google has outside?
So the RBI requirement is called data localization for payments. Data localization says that beyond 24 hours, payment-related sensitive information cannot rest outside the country. Okay. So all payment participants follow those guidelines. These are audited and checked on a regular basis, and so on and so forth.
Fine. And if a transaction fails, when I'm paying something and the transaction fails, then do I get the money back? But if it's debited and doesn't reach the pay, pay, then? Yeah.
So if it's sort of within that same settlement cycle, actually proactively you'll get the money back. And if it's not, then it might take up to a day. But the money will come back by itself.
Okay, fine. So
and there's also a mechanism to raise a query. If let's say the money was sent and somebody's telling you it's not been received, I think most apps now also have a mechanism of showing the status of the payment. And we have something called UPI help, where through that also the status of the payment can be checked back.
So, Praveena, on the same question which Nancy asked, so when people are using the credit on the UPI, and I have used it for a few times, so using the RuPay credit card, if a transaction goes through and it fails, generally the reversal happens in the next payment cycle. So till that time, I really don't know whether I'm getting the reversal of the transaction which was failed. I'm not sure if it's already in your knowledge or not, but is there any work on that to improve that at least customer know, okay, this payment which failed on the credit card is getting reversed? It has happened with me in last 2 billing cycles, and every time in the next billing cycle I get to know, okay, these failed transactions have been reversed. which generally take 30 days, right?
I'm very surprised. It doesn't take that long because it happens for UPI. It happens in a day, and
I'm talking about credit, UPI, credit
yeah.
on the UPI.
So for credit cards, it will be based on a refund, right? I presume you're talking of a refund. So it depends on when the merchant actually processes.
No. I'm talking about the failed transaction.
Okay. It should ideally not take so long, Pawan, as per the guidelines.
I will share separately.
Yeah. Okay.
Yeah, Mr. Venugopal, you wanted to ask question, and then we will have question from last question
Yeah,
from Richa.
yeah. Shall I do it now?
Yeah, please go ahead.
Yeah. Praveena,
Yeah.
now that you have made RuPay as a both debit and credit card, I said, once upon a time I have been using a Diners Club card, which has no credit limit at all. Right. Is there any scope by which you can convert RuPay to that level? I said, no credit limit. Because I have used it when I had a heart attack in Apollo Hospital. I paid about 3.5 lakhs using that one single card.
Yeah. Yeah. So there are cards for various segments of customers even today. So there are cards for a very high credit worthy customer, which will have that kind of very high credit limits. And then based on segment of customer, the credit limit changes. So RuPay is a card network, and the credit limit is given by the lender, the issuer of the card, which is a bank. So all banks are issuing RuPay credit cards, and they issue it for across all segments of customers. So yes, it is possible, and some of those programs will be launched shortly.
Yeah, that may be very, very useful. At that point of time, ex-customer might not have enough money in the bank, but he will have exigencies to spend that money on a medical account or some other ground. Once the card actually pays out the money, within the 30 days time, he may be able to mobilize the money and put it in the bank. The card can take it.
Yeah.
But that facility is not being available in any of the credit cards now as of now. They go only by the credit rating of the individual. So you can draw up to 60,000 rupees, 1 lakh, etc., based on the transaction. So if they are good things, they are able to do it.
That's what, in fact, linking to UPI will do. It is now possible that based on the transaction history, so let's say a lower credit limit is given to start with, but based on the transaction history, credit worthiness is increasing for the customer because of the transaction history. And the consumer will have the ability to ask for an increase in limit on a temporary basis. So it's called a surge limit, which means increase in limit for a temporary basis. And because the customer has a good history, the bank or the credit card issuer will also be able to do that. So I think this is the kind of feature functionality and experience that is being introduced on UPI. So it's not yet fully there in market, but it will be coming.
Good.
Okay.
One question, Praveena.
So that was my father, by the way, Anil.
Mr. Goel, sorry.
I said that was my father, by the way.
Okay.
I know that.
I know.
You know that.
I know that.
Mr.
We
Goel,
all
can I
know
ask Richa to just ask the question, please, and you can finish it off. Yeah, Richa, please unmute yourself, Richa.
Yes. Am I audible now?
Yeah.
Yeah, thank you, ma'am. Thank you very much for the session. I have two, my questions are from larger context, like when you started your discussion with the policy aspect. So I just want to ask two things. One is this UPI is in facilitator for this payment thing. So government is focusing on this strengthening this UPI system, but ultimately you need another application for to complete the cycle of a payment, and the government is not focusing on those parts. Like we are using Google Pay, Paytm, or all those applications. These applications are promoted, and there is no any, you can say, any substitute which is again developed by government entity. So would you like to tell something regarding that?
Yeah, I think there's a lot of work happening. Number of entities are there. In fact, a number of new apps have been launched in the last 2 to 3 years. NPCI itself runs an app called Beam, which is an app which can be used by users. All new functionality of UPI is first introduced on Beam. So actually, it's always highly innovative. And it has a very loyal user base as well. So maybe you can try using Beam. But the number of new apps, both banks coming up with apps, SBI is really focusing on YONO. HDFC is focusing on PayZapp. ICICI has iMobile. So banks are also really focusing on their customer experience, journey enhancement, and introducing apps which are very specific to the space. A lot of large corporates have come in. So Tata New, the entire Tata Group, as part of their digital initiative, has Tata New app. We have the Aditya Birla Group, Bajaj FinTech, and I can go on with naming a list. It's there on the NPCI website if you're interested. And then very tech-savvy fintechs are there. There is Cred and Kiwi and so on and so forth. Again, a very long list that you can see there. So number of players are there, each one of them looking at a certain cohort of consumers. There is Grow, for example, which comes from the investment side as an app focusing on UPI and payments. Thank you.
My another question is regarding this. You said digital public infrastructure. So when we talk about data, what do you think should come as a policy intervention, especially for this data security? What is your recommendation for that? Because we all understand they say that data is not like it is not leaked, but actually data is going outside. We all know, and like we know the other part as well. So what do you think how policy should go? Because they use for analysis and that they take in while their declaration as well. When we are
sorry, just in the interest of time, and just maybe I'll have to close with this question. But there is a data privacy bill in India, which is which is very much in the process of being implemented, and I think most of what you just mentioned is addressed within that context. So Anil.
Okay, yeah, Praveena. So thanks a lot. Thank you for a very good session and a lot of good answers you gave to all the questions. And with that, I thank you and I thank all the participants for joining this session. I hope you found it useful. Thank you very much to all of you.
Thank you, Anil. Thank you, Praveena ji.
Thank you.
Thank you, Anil. Thank you, everybody.
Thank you, Venugopal ji.